Hello, everyone. Welcome to this week's weekly market view for Monday, the 8th of September 2025 to Friday, the 12th of September 2025. My name is Vishal. Let's get started. All right, so let's start with the weekly chart of the Nifty. And seems like this weekly level of demand of the Nifty is holding up very nicely. We have had this 6 week of consecutive bearishness, then a little bit of pause, then a move to the upside. And now we are consolidating, but seems like we are trying to push to the upside. We do see a supply zone around this level here, 25,452 to 25,704, which might act as an interim barrier. If you go into the daily chart, we saw a reaction from this supply zone from last week, which was also discussed, and we had a nice fall from that level of supply. We came into this level of demand, and now we are again seeing a reaction to the upside. Now, because of this formation that has taken place over here, so we have a rally-based rally and then a drop-based rally. It seems like the markets are going to try and push further to the upside. They might hold on to this level for a bit. We might see a little bit of a selling that might come from 25,087 to 25,159. But it's more likely that this level will also be eventually taken out, and prices are likely to move towards these key levels here. 25,400, 25,600, these are going to be the key levels on the Nifty. And then if these levels also get violated, then we will have a little bit of a barrier at around 25,727 to 25,916. Pretty much these levels are a little far away. So I think the level that actually concerns us the most is this level. Let us see how Nifty plays out in the coming weeks or maybe in the coming months. Let's move on to the next chart now. We are going to talk about Bank Nifty. So if you look at Nifty Bank, so Nifty Bank has taken a good support, I would say, because this was a prior resistance level that became a strong support. So we are seeing some nice support being built up over here, and now we are seeing a move to the upside. We do have an interim barrier here on the Bank Nifty, 55,025 to 55,338. But in case once this supply zone is taken out, there is likely that price is likely to move towards 56,915 to 57322. So again, just like how we are seeing the momentum on the Nifty, I think Bank Nifty is also now slowly and steadily driving all the Bank Nifty stocks also to the upside. Now, what is interesting to see is that we saw a sudden fall in the market last week. So, there were some questions that came up that, what was probably the reason for the market to fall. So people spoke about the theory of, the rupee, kind of weakening. Some said something else. Some were putting the blame on the news, etc. But as a trader and as a technical analyst, what you can also do is you can look at two key charts here to actually find out what could be the actual reason. So the first chart that I would like to talk a little bit about is the India VIX chart. And not many people talk about this, but this is a good gauge to see where the index is likely to head. So if you look very carefully over here, we are now right into a daily demand zone. Now, although this daily demand zone is tested, I would just ignore the VIX for now. And if I have to just mark the most recent level of supply and demand, I would go ahead and plot this drop-based rally level. And if we just go a little bit further above, we would still have this drop-based drop level. All right. So now these are the two key levels. And right now, if you see, the India VIX is trading onto the demand zone side, which means that maybe in the intermediate term, these VIX levels might tend to rise. Now, usually what happens is when the India VIX rises, the Nifty behaves exactly opposite of how the India VIX behaves. So they are inversely correlated. So this is one factor where there could be some kind of a, I would say, an obstacle for the Nifty to move and make an all-time high, because India VIX is now trading close into this level of demand. And unless and until India VIX breaks this level of demand and then moves further down, then probably Nifty might push up. But if that does not happen, then we might face a little bit of a stiff resistance on the Nifty after, obviously, eventually it hits those supply zones and so on and so forth. All right. We also see a supply zone on the India VIX around 13.63, 14.55. But as of right now, those levels are a little bit far away from current market price. But it'll be interesting to see if the India VIX does get there into that level of supply, will Nifty come into a level of demand at the same time? The other possible indicator to check where Nifty could potentially turn is by looking at the USD-INR. So both the India VIX and the USD-INR are great instruments to check the inverse correlation on the Nifty. So if you look at the overall USD-INR chart, this is the daily level of demand. And you can see that today we have seen a little bit of a selling pressure on the USD-INR. And because we are seeing a selling pressure on the USD-INR, you are seeing a momentum to the upside on the Nifty. So now where can the Nifty move up to? So if you are looking at the USD-INR demand level, it's most likely that the USD-INR might come into this level of demand, and most likely Nifty might hit a supply level at the same time. So if both these phenomena occur at the same time, then probably we would expect USD-INR to move up, and then we would also expect Nifty to move down from that level of supply. So keep a close watch on this level, and let us see whether the USD-INR hits demand and whether the Nifty hits the level of supply at the same time. All right. Now let's move on to an interesting sector. So let's remove all the tools here, and so this week we are going to talk about the Nifty IT sector. So let's look at the Nifty IT sector. And if you look at the Nifty IT sector, the Nifty IT sector has been under some pressure, obviously because of all the Trump policies and all the tariffs. But as we are coming down, we are coming to a very, very key level of demand on the Nifty IT index. In fact, we have bounced from a very good level of demand once. This is the second time we have given a bounce from this level of demand. And now we are coming to a level of weekly demand. Now, what does this mean? This means that there is a possibility that all the stocks that belong to the IT sector and which are coming into a level of demand could be potentially bouncing out of those levels of demand. So let's quickly just check what's the situation with Infosys first, because these are all the big players, and what is the situation with TCS. So first we'll look at Infosys, and you can clearly see that although the sector chart has not come into a level of demand, but the Infosys stock has already hit a similar level of demand on the weekly chart. What we could conclude from here is, in case if price goes a little further down, we might see a slight deeper correction on Infosys. But if the Nifty IT sector tends to hold on to that weekly level of demand, then most likely we would see an uptick in the Nifty IT sector, and at the same time, we would also see an uptick in Infosys. So again, this is also a good measure to compare the IT sector with an IT related stock. The next stock that we are going to discuss is TCS. And with respect to TCS, we do not, or rather, I don't see a very clear level of demand nearby. But we do have this very, very interesting level on the monthly chart, which is a little far away from current market price. And this makes me feel that probably the IT sector might even correct further. So you have a supply zone now on TCS around 3454 to 3719. And we also have a very, very good level of demand at around 2670 to 2491, which is on the monthly chart of TCS. So let's keep a close watch on these levels, and let us see once price gets to these levels, what happens. All right. So we are at the end of this week's analysis. I hope you all enjoyed this short and sweet analysis. And if you do like this analysis, please do mention in your comments what you liked about this session and what would you like me to cover in the next session. Also, if you are still not a subscriber of our channel, hit the subscription button, hit the like button so that you get further notifications from all of us. Have a great trading week, everyone. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.